All right, so it is July 2023. We've got our June numbers. So I'm going to be talking about the housing market here on the Central Coast. If it is your first time, welcome. I'm Joshua Farris. I'm a real estate broker here on the Central Coast. I've been a real estate agent for about 10 years now, helping buyers, sellers, and investors here in San Luis Obispo County. So I'll be providing my real world experience out there helping people and give you some perspective, kind of big picture items as far as the data is concerned on some more macro level housing market data. So welcome. Please like and subscribe and share this video if you find it useful. Let's go ahead and get started. All right, so let's go ahead and get into it. The theme really here for the last years have been the rates, right? So a lot of people, and like I talked about in my previous video, have locked in their rates at that sub 3% or 3.5% amount, and the inventory therefore has been lowered because a lot of people who have locked in their rates really don't see the ability or the opportunity to sell their house and move either across or up as far as their house is concerned, because the payments are so much higher now that the rates are in the low sevens. So this is putting a downward pressure on inventory, and it's caused housing affordability really to be quite low. So it's made it difficult for buyers out there because prices are still relatively high, and the interest rates are relatively high as well. And I think this article here kind of illustrates that perfectly. First-time buyers' affordability has continued its downward path as rates stay high and prices edge up. The biggest reduction in affordability year over year is in Southern California. And like I said, a lot of this is due to the rates that are being brought by the Fed. And if we can take a look here at this article with Barron's, almost all Fed officials opted for a June rate pause, but a July increase is on the table. I would think that we're going to be increasing the rates even more in July to combat some of this inflation that we're seeing. And if we saw the rates go down, then the inflation would really go out of control. So what that is going to continue to do, I see, is make the prices for real estate edge down a little bit, just because with higher borrowing costs, that's going to make the buyer's ability to purchase a home a bit more difficult. And so that's what I would expect in the next few months. It means that it's still going to be a seller's market, but with reduced inventory, it's going to maintain prices where they're at. And I think it's going to discourage some buyers. Now, that doesn't mean that it's going to be impossible if you're a first-time home buyer, but you need to really be smart about it. And I am encouraging home buyers, especially first-time home buyers, to negotiate some of those closing costs and those credits to lower your monthly payment and to lower your rate. So that's what I'm recommending for a lot of my home buyers who are out there looking for their houses. All right, so let's go ahead and take a look at some data here specifically for the Central Coast and pull up, first of all, sales price. So let's pull up that chart here. And as we can see, we continue to trend upward overall, but we're seeing a little bit of a downtrend from June and May. We had a high here of 925 in April, and that moved up from a low of February. Price per square foot is also trending up. For the county here, we saw around 500 for price per square foot, and it's trended up from it being lower in the high fours back in January of this year, so continued trending up. So with that reduced inventory and still we've got a strong relative demand, we see the days on market relatively low. So let's pull up that days on market chart here, and we can see the days on market is trending down here, 8 for the county, and that's down from 9 from last month. So still relatively low there on days on market. So let's go ahead and pull up the median percent of original price received. This is an important indicator for us, gives us an idea of what you might be expecting to receive as a seller when you bring your house to the market. And here we can see this last month it was about 100%. It's down a little bit back in the high of March 2022, where it was about 103%. New listings here for the county, and I pulled up a few individual cities here. You can see Paso Robles, Atascadero, Los Osos, and Arroyo Grande. And I can pull up the data for you, the home area that you're looking for, whatever city that you are looking in, to kind of get a sense of what's out there and what's available. So what am I seeing out there as I'm helping my buyers become homeowners and my sellers sell? So I've got a lot of listings and clients that have moved out of the area. And so we've received great prices for their homes most of the time, over asking price. Actually, the last 3 listings I've had have all been over asking price. We're taking on a new listing here in Paso Robles, so we're going to be bringing that one to the market here shortly. The buyers out there that I'm helping, we're still having struggle with limited inventory, so we're doing a little bit more of a guerrilla marketing campaign and reaching out directly to homeowners, asking them if they're looking to sell, to set up off-market deals. So that's an opportunity, and I recommend that, especially if you're selling a home and buying another property. It's important to have as many options out there available and be realistic on what your expectations are. Just with that reduced inventory and still relatively high prices and competition, it can be tricky out there, especially if you're a contingent seller. So making sure that you get all of your ducks in a row to get your house that you're selling sold for the top dollar and the great terms, and that you are able to find a replacement property. So that's what we're working on with our clients, really helping them find properties that might be off market, or maybe were expired the last 6 months, just didn't sell, and they might be open to an offer on their house. So if you are a renter right now and you're looking to own a home, it's important now that you lock in your rate, or you use those credits to pay down your rate there. I anticipate the rental market to continue to go up as we have new people that are moving into being renters. And if you are out there looking for rentals, you'll see that inventory is really low and the prices have gone up. We see here for the Rent-A-Meter chart here, we continue to see the historic trend line edge up here. And I know this is from actually a real world example of a 9-unit property on Nacimiento Avenue that is for sale. It's a 9-unit apartment complex. So great opportunity out there for an investor if you are one. But I continue to see my expectation is that the rents are going to increase. So it's actually a good time for investors out there looking to own multifamily and rent, because I don't anticipate the home affordability index to go up any higher anytime soon, maybe next year. But for right now, we continue to see low affordability, and a lot more people are going to stay in their rentals or be looking for rentals, which is going to be increasing the rental price that you can get for your multifamily that you have out there. So make sure to be smart. You know, it's a little bit more of a risky time if you are an investor. So really do your due diligence in making sure that you are appropriately calculating and filtering your tenants out there. But I continue to see the rental prices increase, which is good if you have rental properties, and I anticipate that asset market to continue to trend up as regards to real estate investments. So I don't have a crystal ball, but I anticipate with the Fed rate potential in the July here, now that we're in July, I anticipate that's going to even put more of a damper on the existing inventory. It's not going to make people more excited about selling, although people who are that do have second homes might be looking to sell. But I continue to see seller's market here in quarter number 3, quarter number 4 here for the Central Coast of California. And if you are a buyer, like I said, make sure that you're pre-approved, you're pre-qualified, and you really have a strong budget and criteria so that you can act quickly and get that offer submitted if you do find the house that you're looking for. And so you can own a piece here of the Central Coast. If you've got any questions, please reach out. Be happy to sit down with you and go over your individual goals, whether or not you're selling a house here on the Central Coast and you want the maximum value for it, or you're looking to own real estate here on the Central Coast as well. I'm happy to help you with that and make your dreams a reality. And if you'd like to sit down and talk about your real estate investment portfolio and what your goals are in the next 10, 15, 20 years of accumulating a real estate portfolio or adding to it, please feel free to reach out. I love sitting down and chatting with clients about that and how we can help them. Again, thank you for taking the time. Please like and subscribe, and we'll see you on the next one. Bye.